For your money this noon, earning more and being frugal, often cited as the keys to financial success.
Increasing your salary and cutting expenses, though, are only part of the picture. Andy Mattingly from Forum Credit Union is here to explain why net worth is the true gauge of financial success. So you want to give a simple definition of net worth?
Sure. Net worth is basically everything that you own, cars, house, investments, 401k, and you subtract everything that you owe on all of those, and then you have your net worth.
You would think, though, the more you make, the more your net worth, but you're saying not so.
Well, that's not necessarily the case, because the more someone makes, the more expensive their lifestyle becomes.
More money, more problems.
It can become, and that doesn't always lead to, increased net worth. Of course, making money, more money, and spending less does lead to that, but it doesn't always do that.
Okay, so what else is required to effectively build it?
Well, one important thing is looking at the assets that you're purchasing, and you want to make sure they're appreciating assets. So real estate, stocks, bonds, your 401k. Most of the times, all of those things appreciate in value.
Most of the times. What are some things we could do foundation-wise to help our net worth?
Well, starting to save early. And then making sure that you're buying real estate, maybe less expensive cars, get out of debt quicker. Those are all things that impact your net worth.
Well, we always hear the car depreciates $2,000 the minute you drive off the lot.
Yes.
But somebody will say, well, no, this car is going to appreciate in value. What are depreciating assets?
Usually most appreciating assets are cars, unless you're buying classic cars or a car that you're going to hold for 30 years that might become classic, but good luck trying to figure out which one that's going to be. Recreational vehicles, all of our hobby interests, all of those purchases usually don't hold their value.
Anything that's fun is going to depreciate,
Yes.
probably.
Yes.
Let's talk millennials, I guess, that a lot of them are watching, that many younger people watching have a negative net worth. Talk about that being a problem.
Yeah, and it doesn't have to be a problem, because you typically are going to start out with negative net worth.
Okay.
You don't have a lot of assets, you haven't saved a lot. You probably have a car, you don't have a house yet, so you have a student loan debt, other debt, so you are going to be in a negative situation, but it's where you go from there that is the most important.
All right, so where do you go from there? How do you increase it?
Well, you start with making smart choices in what you buy or invest in. So get in appreciating assets. Spend more money on getting into your 401k than you do on the car you buy. Choose a less expensive car. You're going to build net worth that way. You think about getting a home instead of renting the $3,000 penthouse apartment. Think about putting that into a home so that you have an appreciating asset. All of those things, over time, you'll get your net worth that you need.
Sometimes that requires them living with their parents for a little bit longer.
Yes,
Andy.
it does. That's not a bad problem.
To save. All right, Andy, where can people find you?
At forumcu.com.
Thank you so much.